Good day, everybody. Great to have you with us and to kick off today's sessions. We're going to talk about a fast trading technique using weekly options, same week options that have an expiration each Friday, and how you can take advantage of those options just in the matter of 48 hours or less with what's something we call lightning options trader. I founded bigtrends.com back in 1999. We've been teaching people about how to do strategies like this, take advantage of real-time volatility. You know, the market's been plenty volatile, right? So basically the goal is, how do we harness that volatility? How do we put the power, that quick strike, to work, whether we're betting up or down? The beauty is we don't have to be just betting to the upside. As you know, you want to take advantage of this downside opportunity that the markets have created and will continue to create lots of opportunities in both directions. As we get started, just a quick reminder, the information provided in this presentation is based on our proprietary research and is intended for illustrative purposes only. These should not be considered as specific advisory recommendations here today. Know that stock and options trading have large potential rewards, but also large potential risk. The past performance of any trading system or methodology is not necessarily indicative of future results. Do see our terms of use on our bigtrends.com homepage for more information in this regard. So what are we going to talk about here today in my session? We're going to go through kind of 3 core secrets that you can use to trade same week options effectively over time. Obviously, same week options, knowing that they only have days to go before expiration, are more volatile, right? So you've got to manage that volatility. And one of the ways we manage it, our first secret, is that we only trade on certain days of the week. I'm going to give you that little formula here momentarily. But the idea is that you want to have the increased leverage, but you also want to lower how much you have to pay for those options as they head into their expiration at each Friday's close. The other thing is that when we talk about indicators, which we'll get into, we don't just use one technique. We actually use 2. We call that double confirmation, meaning that both of those indicators have to signal together at the same time, and it has to be a fresh signal. We don't want signals that have been on for a while. We want things that are just starting to move up or down, and we want to try to reduce fake outs, right? Fake outs versus true breakouts. Fake outs will mess with not just your trading capital, but they'll mess with your trading confidence. So it's really important that you manage this. And then, of course, knowing how to place your stop and your target is always important, but especially important with options that might have a day or 2 left before their expiration, right? So we want to make sure that we can get out of those if it's working or if it's not, and identify a favorable amount of reward relative to our risks to have a proper risk-reward ratio. If you don't know me, I've been trading for over 32 years. I caught the trading bug when I was at Duke University, and after graduating there, went on to be an analyst and head of research for the nation's largest options newsletter in the 90s, and then launched bigtrends.com in 1999. So we've been serving folks for now coming up on 23 years here in a little over a month. And so it's really been a blessing to share with people what has worked for me, and also some of the lessons of what hasn't worked, right? So you know that the idea is that over time, you're going to have winners and losers. And the goal, of course, is, does my system, does your method actually guide you through to get more success, and managing the times where, when it's not working, it's not having too big of a drawdown against you. So these are time-tested things that have worked for us across many years of data and many years of trading, and we're going to show you how we do that today. I ask for your full attention and would encourage you, on all the speakers today, give your full attention. The time that you're allotting here is really helping give you a shortcut to what's taken me and the other speakers many years of sort of the school of hard knocks, right? So the idea is that close out all the other distractions, put your phone on vibrate, get comfortable, note any questions. You don't want to miss out on important lessons here. As you know, 2022, this year, has been a year of massive movement, and in particular with the recent market downdraft, with the Fed raising interest rates again here in the US by another 75 basis points, which is another 0.75%, and talking tough like they're going to keep going. The stock market is not like that. And so we haven't seen where's that pivot, as it's called, from the Fed, that essentially that pause or turn where they stop tightening and just back off for a while, which I think would be viewed as a plus by the markets. We're not there yet. So we developed this strategy a while ago to say, look, we want to take advantage of same week options, meaning options that expire each Friday, and be in and out earlier in that week, but basically certainly be out before the expiration. So we're going to share with you how we do this. Now, notice that we've even put a warning on here to say this is an important lesson here, is that you must have a system, and especially when you're talking about options that are this close to expiration. So this is definitely not a widows and orphans strategy. It's more aggressive. But bottom line is that I want to share with you what's been working for us including in recent markets here. So we call these same week trading secrets. And so do listen and follow along closely before you try this method. And it's something where you'll actually get all the guide from us when you join our Lightning Options Trader strategy, which I'll tell you how you can do that later. But there's certain days, we said before, that are better with this strategy. You know, we used to kind of, when we were first testing it, call it lotto trades. I don't love the name lotto because it implies that it's like a lottery ticket, which of course is a very low probability event. We put the probabilities a lot more in your favor than that. But the idea is that, of course, as you get closer to the end of the week expiration, your leverage will increase, but so will the volatility of your trade. So it's really important to kind of find the sweet spot. And for us, the sweet spot is that we don't want to get in right away to start off the week. We want to wait at first, and then we want to say, look, let's also not enter on the final day of the week. So no Friday entries. Okay, we could have a Friday exit, but bottom line is that let's not get in that late. Wednesday is our first target, and we only will trade Thursday if we've just cashed out of a prior Wednesday into early Thursday profit opportunity. Okay, so we're going to talk about the what's got to be the right configuration in order to take a Thursday trade. But usually we'll have a trade each Wednesday with this strategy. So when I make a trade, like I'll show you an example, like we did this past Wednesday, where we're in Wednesday afternoon, we were out Thursday morning. So, you know, the beauty of this is that it's not a day trade strategy. It's even though you're holding it for from one afternoon to the next morning, less than 24 hours, it's still 2 days of trading. So you don't have to worry about that if you're a smaller trading account. We're not in this for day trades. So I mentioned weekly options a few times here, and it used to be back in the day, the third Friday of the month was a traditional monthly options expiration. So I would get 1 week a month back in the 90s to do this strategy. But about 2005, weekly options came around. And what that means is that instead of one 1 week a month where I could do this last week of the options life, now every one of those Fridays becomes a weekly expiration for a lot of the big names, whether it's the FANG names or a lot of other stocks. There's probably about 500 stocks now that have weekly options, give or take, maybe even a bit more than that, and a lot of other ETFs and indexes and stuff that have weeklies too. So if you're going to be in and out, like I said, from a Wednesday on this chart, like say we got in Wednesday the 7th, we know we've only got till then, we'll buy the options that expire that 2 days later, the 9th, right? We're going to trade them very close. But the idea is that, of course, we're going to get the higher leverage, but we got to have a plan on how we get our profit and how we take our stop. We'll get into that. And of course, we've got to have momentum. Technical momentum's got to be working for us. If you like to buy dips and hope it bounces back, that might work on individual stocks. It's not a great strategy for options buying, okay? Because we're going to buy an option to bet on an upside move or bet on a downside move in an individual stock, and we want to make sure we have that momentum behind us. So we'll get into the indicators here. And this is something that we've recently made available to our big trends community, so I'm telling you about it too. And so we'll talk about our performance first, looking over the last 24 months, the last 2 years of data. You can see that and again, past performance never guarantees future results. This assumes that you put in no more than $1,000 maximum per trade, and we'll never hold more than one trade open at once, right? So if we get in on a Wednesday and we haven't sold it into Thursday, we won't put our Thursday trade on. So we'll just clean up that one trade for that week. If we've cashed out of one, we can put another one on that next day on Thursday if we've got an appropriate signal. But you can see in this example, it's saying if you had a model $10,000 portfolio, so you're putting $1,000 in maximum per trade, then you know, okay, you're not overcommitting your capital in any one trade. That'd be 10% of your trading account if you took 1,000 of a starting $10,000 value. But you can see that 10,000 grew to over 25,000. It was almost 26. So that was a $15,915 profit, adding up all gains and losses before commissions. Now, speaking of commissions, by the way, when I got started trading in 1990, it was a lot more expensive to trade options. Now, you don't have to pay a ticket charge. You shouldn't be paying more than $1 a contract. I know a lot of people are paying as little as 50 cents a contract. So you basically get to keep the vast majority of what you earn. So again, we're going to go through some chart examples here and show you how these trades work here. So let's get into our second secret, how we find these trades. The big part of it is that we don't want to just use one indicator. I know some people just like to look at price action. I think that's a lot of fake out potential if you're just looking at price movement alone. You've got to, in my opinion, look at the underlying structure of that price action with indicators that give you an edge over time. So we're going to show you two techniques that we use. These are oscillators that are similar but not the same. Okay, so we're looking for things that are showing us momentum up for bullish call purchases or momentum down for a bearish put purchase. So when we get the confirmation on both of the indicators, we feel like it not just gives us twice the confirmation, it also gives us twice the confidence in our trades. So it's kind of like two heads are better than one, two indicators are better than one in this case. I'm not saying you should then say 3 would be better than 2 and 4 is better than 3. That's not necessarily true. But in this case, we have a lot more confidence when we see both of these trades clicking, both these indicators clicking for a new trade. So let's look at one here with Best Buy, BBY, on a downside opportunity. And what we're seeing on this chart, this is a daily chart. These are pulled from TradeStation. You don't have to have any set platform as long as you can execute your trades. We call out all these trades for our Lightning Options Trader subscribers via real-time email alert and a real-time text alert to your smartphone when you become a subscriber. So you know you're not going to miss a trade entry, or more importantly, not miss a trade exit when we need to get in or get out. We'll never leave you hanging. You'll know what to do with every trade that we call out, for better or worse, on how to manage. So in this case, these options you can see tend to be pretty reasonably priced, right? How are we determining when the stock is showing us this breakdown here? In this case, we've got a couple of different indicators here. The red one is a version of the Larry Williams %R, percent range indicator here. Just give you a little taste of this. And the other one here is a unique time frame on the RSI, traditional relative strength index calculation. Okay, so these are indicators where when both of them cross under their oversold threshold on the same bar of action here, you can see both of them are crossing from, they weren't oversold enough yet. And oversold, by the way, is not necessarily a good thing. Oversold is telling us that here in this last hour, stock's trading just under 71 bucks. It's about 70 3/4. And so what we do is we buy the first strike in the money, which is pretty close to the money, in this case, 71 strike put. If you're new to options, and by the way, I'm kind of curious, how many of you have traded options? If you've traded options, type the number of years you've traded. Just type a 1 if you're in your first year. If you've never traded an option, type a 0. I'm just curious how many of you know about options. Because when we talk about a put, so that we got a 0, a 5, I'm not going to name names, a 10. So a little mix there right away. So we talk about a put is a right to sell the stock. So that put gets more valuable as the stock drops, right? If this option finishes at expiration at 70, then the 71 put's worth $1, right? Because you got a right to sell it at 71, the stock's at 70, there's your buck. So why would we pay, when the stock's trading 70 3/4, why would we pay $107 to control 100 shares betting on the downside? Because we think it's going to go down more than $1, right? We think it's going to go down potentially a couple bucks here, down to about 69, just under 69 is where we get our double target. And that's what we put in there, is when we buy something, in this case for $107 to control 100 shares, remember, if you were investing up to $1,000 in this example, you would get how many contracts at maximum? You get 9 contracts here because 9 contracts times 107 apiece would cost you $963. You'd be controlling 900 shares on the downside. Of course, that would be the equivalent of about $60,000 worth of stock that you're controlling for less than $1,000, right? So you can see where the leverage potential kicks in this example. When the stock does get popped down the next morning, you see it pops down just to our target, just under 69, and we're cashing it out at $2.15. That was our standing order to sell your whole position if it doubles. We don't try to take partial profits, take part of our contracts off and keep part of them on. Double for us is plenty good. So for this perspective, and we'll talk about our stop too, but bottom line is that 100% gain, we got 100.9% the next trading morning. You can see it then later reversed and popped on back up, right? So if you're passive, the expiration on this one's going to be 2 days later, Friday, September 2nd. If you're passive and it finishes here just above 71, you have the risk of losing all of your investment. You always have that risk when you buy an option. Of course, if you sell an option, you could lose many times of your potential premium you collect on an option sale. So we're not a big fan of any kind of naked option selling. We're doing a much more limited risk strategy here where we're going to typically take our stop loss if we hit a minus 50% level. Okay, so targeting plus 100% and then minus 50%. If you could do that half the time, win 100, lose 50, win 100, lose 50, you're putting in $1,000 a trade. That would mean that you would be making 1,000 when you're right. You'd be losing 500 when you're wrong. That would mean that on every 2 trades, one winner, one loser, make 1,000, lose 500. You'd be up $500 each 2 trades with one winner and one loser. Just a simplified example. And the idea being that if that happens, what are you averaging per trade? You're averaging $250 of positive gain per trade. We call that a positive expectancy of $250 every time you place a trade, assuming you got a 50-50 win rate and you're alternating back and forth, one winner, one loser at our target and our stop. Obviously, the actual results are going to vary based on how many winners in a row versus losers in a row, et cetera, you might have. So we encourage you to stay very balanced in your not just your capital exposure per trade, but also in your psychology. So you don't get too high or too low after a winning trade or a series of winning trades or after a losing trade or 2 or 3. It's going to happen where you have multiple winners or multiple losers in a row. You got to be able to kind of stomach that by not overcommitting your capital on any trade, kind of just steady small allocations, especially getting started. That's a big part of building your confidence over time is start small and build, okay? So just about saying, look, that you can see it didn't quite meet our criteria back here where it was, this one was crossing below there, but this one had already crossed below the prior bar here. So that meant that they didn't happen together. So that would not be a signal on that first breakdown bar. They need to both cross at the same bar, the same point of telling us we got a fresh breakdown. Even if it was short-lived like this one lasted for the next morning, that was enough. That's the thing, is that you don't have to really care where the stock's going to be days or weeks from now. Many days or weeks from now. We're looking at just the next 1 or 2 days maximum, right? So we're really trying to take advantage of that momentum. That was a bearish put trade, but of course we'll trade puts and calls pretty close to even. You can see over the past year, we've had about 55% of the trades calls and about 45% of the trades puts, right? And think about the past year that goes back into September of 2021, right? So we definitely had a more bullish bias in the last part of last year, but of course, a little bit more bearish bias here with more recent downside opportunities. So we're not going to try to fight the market. We're going to tend to align ourselves with where we're getting the vast majority of opportunities. But we do run this through a lot of data to make sure that we've got an edge. We'll get into that too. Let's talk about a bullish example though. This is stay balanced between, we showed you a put, now let's show you a call. This is on General Electric, the original Dow stock going back to the days of Thomas Edison, right? GE. Okay, so here's a GE example in August where we got the crossover point on GE on both the percent R and showing that red going, red's supposed to be bad, right? I didn't change my colors here, but and then the RSI going overbought too. You get all our settings, all our rule sheets when you get signed up. But that's happening right near the close here, in the stock's trading just over 77. So that's on a Wednesday. We're buying the 77 strike calls, and we paid 95 cents. That's $95 to control 100 shares of stock. 100 shares would cost you about $7,700, right? So you're getting like 77 times to 80 times leverage here in this name theoretically. Well, you can see if you pay just under $1, you know that it needs to go up to just under 79 from 77. And you can see the next day it does trade just up a hair above 79. So our 95 cents, $95 to control 100 shares of stock turns into $190. That's our 100% target. 1.90 is our price that you'd be working that order on the profit target. Saying, okay, if we can go from 95 bucks to 190 bucks, we'll take that $95 of profit per contract and cash it in and say sell to close that option at the double, which hit the next day. So in that kind of a case, if that hits the next day on that Thursday, assuming it happens before 3 o'clock, because 3 o'clock is about the time where we would get out of trade on a Wednesday afternoon or a Thursday afternoon, then in this kind of a case, we say, look, now we could get a new trade out the next day too. It's kind of like that idea of when you're making money, you want to be trading more. If it's not working, you probably don't want to be trading more, right? So if we got stopped out on a trade from a Wednesday into a Thursday, we're not going to try to like sort of be like, we got to get that back. It's more like, hey, if that system's not working as well in that particular little window, it's saying, well, let's not try to be too aggressive in our trading. It's already an aggressive strategy. Let's be aggressive when we have profits in our pocket from that week and consider another opportunity. It doesn't have to fire a new trade out that next day after a winter, but it could. Okay, so in this case, you see it keeps going. I don't care what happens many days or weeks hence. I care about what happens over the next 1 to 2 days maximum. Okay, so kind of changes your perspective to say just be right for a very short window of time, put the odds on your side, and then over time that should work out. Knowing that there's going to be winners, there's going to be losers. We'll talk about both here. We'll get into a stop out here in a few minutes. But let's say, okay, what if it doesn't get to our profit target? We also use what we call a time stop. Now, in this case, the time stop is certainly limited by the fact that by Friday at 4 p.m. Wall Street time, Eastern time, that's your expiration of these individual stock options, okay? So we've got to be out before that. So our time stop rule is if it hasn't gone to target on Thursday or into earlier Friday, an hour before the expiration, meaning at 3 p.m. Wall Street time on Friday, we will get out of the trade if it hasn't hit its profit target or hasn't hit its stop. Here's one we did with Kraft Heinz, KHC. You can see we're looking at blue chip stocks here. So KHC was one we did on a Thursday. So we'd had a prior winning trade. Look how both of them now crossed up. We don't come back to the same stock, notice. They weren't crossed up on the Wednesday, they crossed up on the Thursday. So that was on this burst higher right here, stocks trading. You can see about 37 3/4. We're buying the 37.5 strike call. It's the first strike in the money. So that at 37 3/4, that's got a half, or I'm sorry, cost us almost a half buck, 51 bucks per contract. We might have about half of that be intrinsic value, about 25 bucks out of that 50 is intrinsic value. So you still have time risk in these trades, but the idea is that if we can turn them around quickly enough, obviously, we were looking for that thing to get up a little past 38.5. It didn't quite get there, but into the expiration close. This next day, that 24th of June in this case, was an expiration, weekly options expiration, right? So the idea of this is that we're saying, look, we gave it a chance. We were just in it for that next day, essentially, after getting in at 3 p.m. on that Thursday, an hour before that market close. And so, okay, now it got close to our target, but not quite there. And at 3 p.m. on Friday, we closed it out up 76.4%. So the idea of this is that, okay, our double would have been up at like $1.02. So obviously up about 3/4 on that 51-cent entry takes you in the neighborhood there of about getting out close to maybe the high 80, maybe 87, 88 cents. something like that. So you look at that and say, okay, that's fine. There's nothing wrong with that. So it's a good trade. You don't, again, try to wait it out. You don't try to roll it into another expiration. You just say, look, that was the momentum window. We caught that next day up and we gave it a chance to double. It didn't, and we took it out at 3 p.m. Friday. Not every trade is going to work, right? There will be losing trades. Let's talk about a name that hit its stop level. This is one with ON on semiconductor. Okay, the semiconductor stocks, for example, recently have really been getting bashed. And you see in retrospect, it looks like, oh man, it went overbought and then it came right back down. Well, you can see there's a lot of these other ones that don't do that. But in this case, yeah, ON gave us a signal right into the close. Stock is trading near 76 bucks. And we're buying the 75 strike calls into, in this case, the next day is an expiration. So this is a Thursday entry looking out just one more day. And you can see in this case, $1.53 entry means that somewhere around 75 cents, 76 cents is going to be our stop, right? So you can see that as it starts to break down on us the next day and it's coming from above 75, it was opening around 76. As it starts to head down in this area back towards the strike price, this is about where we're going to get stopped, closer to 75 bucks on the final day of that options life, give or take. So we're not writing it all the way down. If you are going to hold and hope, you would put yourself at risk of a total wipeout. There's always that risk anyway. If you got a monster gap down the next day, that could happen. And at some point in the strategy, it probably will. We haven't experienced that total wipeout, but we've experienced some that are beyond a minus 50% stop out, of course. And we've also experienced some that are more than 100% gain. We'll get into that too. But the idea is, look, took a little worse than a 50% loss. It was about a 53% give back, right? So what you don't want to do with this strategy is pyramid your profits, meaning that, okay, when you double your money on a trade, then you roll all those profits in and you try to then, if you were putting $1,000 a trade and you made 1,000, you don't try to trade 2,000 on the next trade, right? You just stay consistent with your capital allocation, because if you put 2,000 into your next trade after just making 1,000 on the last one, then you get cut in half on your 2,000. You just lost 1,000. We want to put you in position to where when you do hit a stop loss, that double should more than offset it, right? So the idea is that, okay, you're trying to make sure you don't mess this up from a capital allocation perspective. Even a good system can be messed up if you get greedy, if you start trying to pyramid profits. I'm not a big believer in that. I'd rather say let's be slow and steady wins the race in our capital allocation. So that one did not work, and we said bye-bye, and we move on. That was the double confirmation on the two indicators. The third secret, and we've already started to talk about it, is how we use our stops and targets. Like we said, a 50% stop, 100% target. It doesn't take a lot of doubles to generate impressive returns over time. Think about this first. If you say, look, if you're putting $1,000 out of a $10,000 account into a trade and it doubles, right? And you just put 1,000 in, you didn't put the whole 10,000, of course. 1,000 turning into 2,000 means that your $10,000 is now worth $11,000 after just one doubler, right, on their first trade. So if that happens, you're like, okay, look, 10% of my account that doubles means I just added 10 percentage points to my total portfolio value, from a $10,000 value before the double to an $11,000 value after, with the 10% allocation. So meaning that, okay, I just added 10 percentage points to my whole year's essentially return. If you think of it that way, my whole portfolio is up 10% off of that one doubler. So you make, say, 3 of those in a year, all the things scratch out, you make 3 of those over and above the scratch outs, even after commissions, and saying, okay, 3 of those doubles could be worth like 30 percentage points, a 30% gain in your portfolio. And for a lot of people, that's a very good year, right? Obviously, we would like to do even better than that, and we have over time, but of course, past performance doesn't guarantee future results. We went back and looked over the last 24 months, how many doubles did we have? We didn't have 3, we had 32 of those, right? So 3,200% or more profits. And so actually 78% of our winning trades were triple digit gains. So some of those weren't triple digit gains, right? But a lot of them were. So the idea is, look, we don't have to worry about that we're going to get enough opportunities to make doubles. This is where also I would say, don't put yourself in a position where you say, price is going for the doublers, but I'm going to be conservative and just take 30, 40, 50% profit targets and get out early because you want to reduce your risk or what have you. And it's like, you don't want to do that, because remember, if you take a 50% gain and a 50% loss, that's a $500 profit on $1,000 on the way up. It's a $500 loss on the way down. You're back to zero on a 50-50 win rate, right? So you want to make sure your gain can more than offset your loss. You say, well, fine, I'll just put a tighter stop on it. Well, then that's going to totally change the parameters of the system. So just, if you follow along the way we do, just start off with even one contract at a time, just to kind of get your feet wet. I think then you can always grow your allocation later as you wish. And certainly we know that trades can gap past our 100% target. Just like they could gap against us, they could gap for us. So here's an outlier example from not long ago in late July on First Solar, FSLR. And so First Solar, as you know, as a big solar name, the whole solar and renewable energy space got a major shot in the arm when Congress kind of surprisingly passed legislation late July to pick up more money going into these renewable and solar energy areas. Now, guess what? You can see our percent R was just barely below our overbought threshold, and so it crossed above. So did our RSI. They both crossed above as it was just starting to move here. The stock's trading in the neighborhood of just over 77, and we had to pay almost $2.50, right? So these options were not cheap. That was a Wednesday trade, so it had 2 days to go till the expiration. But you can see 77 strike call, just barely in the money. We paid $2.50, and look what happens. It doesn't just double on that Congress news, which was kind of came out of the blue, but I believe price action sort of gives you an early warning heads up that there's an opportunity here. Look, it opens close to $89, right? So our $2.50 option on a 77 strike call is now worth like 12.5, give or take, just a hair above that. And so we're getting out for a 5-bagger, 407% profit achieved the next trading morning on the big gap up. Oh, you could have made even more money if you held it into Friday. And I'm saying, look, we're not playing that game. We're saying the bird in the hand is worth a lot more than two in the bush for us, not just from a financial objective. Sometimes, sure, financially you can make even more if you held, but I'm talking about your psychology, your ability to say, okay, I just got a massive outlier way above my 100% profit target, and say, look, I'll take that, I'll put it in my pocket, and you'll put it in your pocket, and you'll be a really happy camper, right? You get a 400% gain. That makes most people's year on if they're 10% of their capital allocation turned into essentially a 400 or a 40% annualized gain just off of the one trade, going up 400% on a 10% allocation, right? So the idea of this is that consider that a windfall. Don't get greedy. Don't let it slip away. Say, look, we're going to go ahead and lock that down and say thanks very much. So, as we recap these 3 same week secrets, we're not messing with Mondays and Tuesdays. When you become a Lightning Options Trader subscriber, Wednesday afternoon, typically around 3 p.m. Wall Street time. It could be as late as 3:30, it could be as early as 2:30, but we tend to run our scans around 2:30 and say, okay, how are these shaping up, and try to get a new trade out if it's got the right setup here. And frankly, the other thing is that the history has to be good with that stock. So we actually have a focus list where we look at histories that are good on both bullish and bearish trades, and then an extended focus list that says, hey, if only the bearish trades are good on certain names, we'll take the put trades, but we won't take the call trades if the call trades aren't a profit factor that's acceptable. So we're doing a lot of data digging for our subscribers and for you when you become on board. Like I said, only Thursday trades are considered when we've had a Wednesday into earlier Thursday winner that's been booked. So if we can book that first profit, kind of get some of that feeling like, hey, some people call it the market's money when you get a free trade, when you say double a trade. And I'm saying, no, it's still your money, right? You want to hang on to it. You want to be sensible with it. You don't want to get yourself overcommitted or overextended all in one direction, a bunch of bull bets or a bunch of bear bets. And that's why with this strategy, it's just one trade at a time. we won't carry 2 trades open at the same time. So that's kind of a relief for a lot of folks who are like, okay, I know with whatever else you're doing with your capital, this can be a supplement rather than saying, no, you better stop what you're doing and go only do this. It's like, no, it's a supplemental adding to your trading opportunities on top of whatever else you might currently be doing. If you're new to options, you'll get a training session from us to kind of help guide you through how all this works and make sure you understand how to read the alerts. In fact, I'm going to show you an example of a recent alert here so you can kind of get an example of that here momentarily. But the double confirmation, getting both of the trades working for us here and adjusting your risk reward ratio. So you're going for a double target versus just a 50% stop loss, 2 to 1, or size of reward versus size of risk. So, and again, just reminding you about our performance achieved over the past 2 years. You see, took a $10,000 portfolio up to $25,915. So it was a $15,915 gross profit before commissions, assuming you put in $1,000 or less per, up to, but no more than $1,000 into each new trade. So obviously you could do this with a lot less than a $10,000 account, right? We're trying to be kind of conservative here, say that's a 159% gain on 10,000. Obviously, if you did it on 5,000, that would basically make it more than a 300% gain. Again, before commissions, but the idea is that commissions a very small impact compared to keeping the vast majority of what you make off of this, knowing that past performance will not guarantee future results. We know the future will vary, right? So the idea of this is that you want to position yourself to make sure that you're not getting greedy, you're focusing on kind of the best of the best opportunities here. And so what we did is we said, look, let's take these 3 secrets and let's build a trading system that will use these time-tested indicators for the double confirmation, and then let's run some data that says, how has that stock performed with this lightning option system to help find new trade signals multiple times per month for our subscribers. And so one of these examples that we did, just to show you, and again, this trade's already over, so just know that this is not a recommendation, but I just want to show you what it looks like real quick, is that when we called out this trade last week on Villatoro, we said, okay, look, we want to get into this new trade on Villatoro. Okay, so what we did is we said, here it is. Just an example. We sent an email at 3:18 p.m. last Wednesday, the 14th. And we said, get into the Villatoro 109 strike puts that are going to expire that last Friday, the 16th. And this is the exact symbol, VLO. 22 is the year, 09 is the month, 16 is the day, P for put, 109 for the strike price. Get in at $2 or less, okay? And so Villatoro was trading just under 109 when we called this trade out. So when we called that trade out, that was on that Wednesday. Then Thursday morning, the stock sold off hard. We needed it to go down to about let me find that here 1 second, about 105. And so when it did, we're saying, look, okay, it just went down to about 105. There it is. And we had put out that morning that we want to target $4. So we put this new instruction out, 9:21 a.m. Eastern, right before the market opened. We got in at 2. You already knew your stop was going to be at $1. Your target's going to be twice 2. It's going to be at 4, right? So when we got the $4, it traded a little bit higher than that. But when we got the $4, we said, okay, take that double and run. So it's one of those things where you get the guidance from us, and got some nice comments like from Randy saying, hey, I had the opportunity to take the trade. I'm extremely pleased it got filled, and he got out at the $4. Wasn't expecting, knew that, hey, not every trade is going to be a winner. So he had proper expectations, but nice, as he said, to start his day out great. But the idea is that, look, we want to make sure that that there's risk in these trades. That you've got to manage that. We'll help you manage all that process, both on the winners and the losers. And so let me just talk quickly about what we've done to set up a fantastic kind of launch package of something that's something we normally would say for a holiday on select services, but I'm doing this as an extra bonus. It's kind of a celebration of our Lightning Options Trader launching to the public recently. You know, folks getting that Valero trade to get them started right, and saying hopefully that we're confident there will be a lot more of those to come, and that will help you manage the losers as well. So, you know, it's more about letting the system do the work. Normally 12 months of the alert service would cost you several $1,000s. And we're going to get into a much better price than that. But basically, you also get my settings and rules with the specific parameters for the indicators. You get a weekly video update from me every Monday at 6 p.m. in your member site access. You get access to me and my analyst team via dedicated email that you can basically, any question you have on your Lightning Options trades, that altogether would typically be $297 a month times 12 months, over $3,500. And for the kind of growth potential we showed you, you know, still well worth it at that price. But I'm going to make it a lot better than that for you today, as my way of saying thanks for including me in this special expo today. Well, bottom line is that you can see here that when you get 12 months, I'm going to double it up for you. I'm going to give you another 12 months free on me. Okay, we call this a BOGO. When you buy 1 year, you get the next one with my compliments. So that means that the 3,500 is now over 7,000 in total value, and I'm going to give it to you today for way less. I'm going to give it to you for a one-time investment of just $997. See, I don't call it a payment if it makes you money, right? It's an investment. Why do you invest in a stock and an option? Because you expect it to make you money, right? When you invest in Big Trend Services, like I said, we're on our 23rd year serving. We served tens of thousands of traders over the past 23 years, and look forward to you joining as well. What you do is you go to the special link we set up for you here. So it's a little bit unique in that it's not a www link, it's a members.bigtrends.com link. I'm going to type it in real quick so Anna doesn't have to worry about that. members.bigtrends.com/LOT for Lightning Options Trader. And so LOT is the special here. And remember, it's a members.bigtrends.com/LOT. So you can copy that. I just pasted it in your window here. You can copy that over into a browser window. And when you do, it'll pop up something that looks like this. Okay, we're big on simplicity. The keep it simple principle in so many things has made my life better as a trader and better for folks getting started here very easily. Notice that we do have a PayPal option here. I know some of you have been asking me about PayPal credit recently. That's something you set up with PayPal where you can kind of buy now, pay later via PayPal. But you buy this, if you've got whatever credit card you want to put in here, of course, all your information. We've already taken it down to our lowest pricing. Remember, this is not a 12-month offer now. This is a 24 months access. So you break your average cost per year down to under $500 a year effectively, but you're paying $997 one time to lock in 2 years of value. That would be more than $7,000 of value with my team and I standing by to not just give you trades on a week-to-week basis over the next 2 years in Lightning Options Trader, but to help you learn with the weekly training to help you grow not just your portfolio, but your knowledge. We call it learn while you earn. So our terms and conditions are linked. Like I said, 23 years in business, we guide you through, gives you all our conditions. You click that button once you've reviewed it, get your credit card information or your PayPal information in, and you'll get a confirmation via email that boom, you're good to go. My team's standing by too if you've got questions. Remember our 800 number toll free, it's 800 Big Trends. That's the easy way to remember. Just remember 800 Big Trends, or you can email us clientcare@bigtrends.com. So we've got something for lots of different traders here, or whatever type of trader you are. If you're more the quick trade variety, then yes, you want to take advantage of this because, like I said, it's had a great past history. Again, past performance doesn't guarantee the future. We know the future will vary, but we're confident that we're going to guide you through the various highs and lows of the market with a special, not 1 but 2 year offer, one-time payment, $997 at that link, members.bigtrends.com/LOT. I'm out of time, but we've got more great speakers to come and fellow traders. So I'm going to hand it back over to Anna so she can keep you moving forward and let us know if you have any questions.
Thanks everybody for joining. Hope everybody's doing okay. I am kind of not prepared for this because I was really trading with my members until now. We in fact called a long on gold using either spot gold or futures. It was optional. But today I will show you a few things that are very, very important to what we do. Anna has a couple of handouts that will hand out to you to know more about us. First, let's go to the website. The website is sierrachartindicators.com. There is a reason why I chose to go with Sierra charts for my indicators, and one of the main reasons, the main reason is the fact that it has a component that I have not seen in any other charts or software providers. That is the historic market depth. Now, a lot of charts, systems, or softwares, they have market depth, but they don't have the historic long-term market depth. The market depth that they show will be around the price only. Meanwhile, we can see a lot of things outside of the price area. Historic and current, all of them are real life entries. But let's go through the presentation and hopefully you will understand what I mean. It's best trading levels using volume profile. I'll be talking about that. SAL indicator, which is substantial attraction levels. That was good for targets, entries, confirmations. Power lines for support, resistance, and breakouts, and more. Now, some of you, or maybe a lot of you, will say, okay, I don't want to switch to a new charting system. I'm happy with what I have here. Whatever system you have, you're happy with. And again, that's fine. We have overcome this issue by offering software Sierra charts included in the pricing. So you can get our services plus Sierra charts including in the price, and everything is laid out in the website. However, we don't sell anything. I don't sell anything at this time. Why? Because you will get to try it first. You will get to install Sierra charts, install all our indicators, all the templates that we have, and then join the trial for 2 weeks. See me doing my top-down analysis, looking at what we do, and then after 2 weeks you can decide. And it's really affordable. It's not that, it's not. I remember at one point we used to offer this for about $8,000 US. Now it's much affordable. It's because I'm approaching it differently. Okay, we will talk about that as well. But to keep you interested for now, before I talk about anything, let me share with you one thing. What do you see here? This is a chart for NASDAQ, right? Do you folks remember what happened yesterday? Anybody was in the market and or facing or watching? You remember what happened yesterday? The big move down, right? If you see what happened here, let me see what I have here. Do I have a message? Okay, if you see what happened, what do we have here? In this area, folks, and this is for volume profile, we have a level that's indicating an area of continuation. And then we have another one that indicating a continuation. This is on a very long term. This is on a daily chart. And we have a level in the area here that needs to be tested. So yesterday, or actually it's been a week now, I'm looking at this NASDAQ to come back down to this area. I'm looking for swing level shorts, right? Yesterday, I told everybody that we have a short on the NASDAQ and targeting this area. And if you see, this is one of the services that we offer. Besides the live trade room, I also offer the Telegram. So this is today's 22nd, 21st of September, yesterday, first thing in the morning. I mentioned to everybody for SPX or ES, I said to everybody, we have down coming from here. We have a zone down and we have anticipating a short. And this was in the morning, 8:54 a.m. And then after that, I said the YM and the NASDAQ the same. I also said ES, which is E-mini S&P, indicating Do you see this magenta line here at the bottom, or purple? This was our target. Why? Because remember I told you about market depth? Market depth, which is controlled or mostly showing market movers or the big boys entries. I had a big entry here showing that the market is attracted to it. And sure enough, NASDAQ, I called it short. NAS 100 or NASDAQ, I said it has a short. This was 12:45 p.m. 12:45 p.m., which means there was almost an hour ahead of an hour and 15 minutes ahead of the FOMC statement yesterday. I called it short, and there was 1,000 ticks move. Not only I called it short, I called it from the entry. I gave everybody the stop loss and everything else. Let me pique your interest. Let me show you what happened yesterday, and then we're gonna go into the education. Okay, I will teach you what we do. This is a recording from yesterday. As you see this is the NASDAQ, NAS 100 or NASDAQ, same thing. NAS 100 is the spot equivalent, which is the CFD, to the NASDAQ. So yesterday, I'm looking at this, and you see I'm typing. This is a video from a session. Look, I'm typing. I'm saying NASDAQ stop losses is here, and we have a short. And at one point, typing, and everybody sees this. I'm talking about, let me see. I'm talking about 155 members you see on top, right? And I called it short. Look at this. I did a sim entry for me to show today, but this was a sim entry. As you see, I entered 3 contracts, as you see, and at one point, careful, I said FOMC is coming up, but I'm seeing the market moving, and all of a sudden, market moved in favor. We took first target. You see the down. You see this? 10 ticks, 15 ticks, or that these are 15 points, not 15 ticks. And do you see behind this area? Look behind look at my target. Do you see the arrow, folks? Do you see the arrow? This is 1,000 ticks move. I'm anticipating 1,000 ticks move. Look what happened. Look what happened. Do you see this? This is at the end of the move. So this was not something random. Again, I offer trials for a reason, because I don't want you to guess. There's no guessing in this. This morning, I called a long on gold. Not this morning, before we closed the session, early afternoon, or late morning, I mean. I called it long. Look at this from here. And right now is going for, if I look at my CFD, it's 134 points or ticks. This is from today. Okay, let's move that and explain the reason behind these things. Okay. So again, I mentioned, if you don't have Sierra chart, no problem. You don't have to switch. You can get it as a demo, use it as a demo. We pay for it. It's part of the program that you get. Okay. Just a second here. Now, first subject is volume profile. What is volume profile? Okay, so let's look at that. Okay, let's go back to the NASDAQ. Volume profile is an indicator that shows you interest, where the market will go, continuation, where the market will reject, where the market is going to hesitate. So basically, it gives you a roadmap to what is the market intending to do. And here's an example. Do you see this volume profile on the right hand side? If I look at my indicators, volume profile. It's set up in a way that it gives you, you know, all the colors, all the edges, according to the percentage of the volume. Okay, and if you look at this, if I bring a couple of legs into this here, meaning if I bring more charts in, you would see more volume profile forming, because what this does, it reads everything, every volume that is happening in the area. This is not possible if you don't have volume profile set up. You cannot use this, you cannot do this with, let's say, tape reading, because I used to do a lot of tape reading. Okay, if I look at, for example, SPX 500 weekly, this is a weekly chart, right? You notice this is long term. We do long term, we do short term as well. You notice there was a level here, and then another level here, but there's a level here, as you see this here, that is empty. That's why we are anticipating for the long term for the S&P to drop even lower now. Okay, that's one of the main things that you need to know. If I look at crude, for example, this is is it a 2-hour chart? Yes, 2-hour chart on crude. If I go like this, you see how I can control the volume profile to make it clear, see the edges and everything. But watch where we rejected. We got rejected here. We got rejected here because of what we see. Look at this level here, rejected here, and then came back down. Look where we got rejected, another level. If you see here, rejected, and then once we went to this inside this orange area, it continued fast, right? So it's all these levels are relevant. How about a move up from this area up to this area and then coming back down, right? It's all relevant, and then going back up. So it's really, you can use long term and short term to determine your trend. It is not easy to determine, folks. Let me go back to the 2-hour chart, and let's see. So to be a little bit more clear, volume profile gives you levels of support and resistance, plus continuation, and the area of stop losses. So if I have a volume profile, and with this I can teach you how to read it in a way like this. If I have a volume profile level here, we call this continuation, and it's evident in some levels that I can show you here later, or during the trial, or whenever you join us. And I have a lot of videos on the website too. So I have another level of continuation here, and I'm looking for a long, for example, just like the gold today. The gold is going fantastic. The gold coming down. I told my members today, I said possible gold long with today's 22nd, stops at 1773 for futures and 1664 for spot CFD, and I called it long. So the gold long was from here. You pay attention. The gold long was from this area, right from this area. Why? It's simple, because if we break into this next area, there's no need for looking for another long. It might continue down, because this is continuation. In between, you have a rejection zone. So the gold was going up. It's an uptrend, so I'm looking for an up. So this was the best level. Do you folks understand the science behind this? This is very straightforward, yet it takes some practice, right? It takes some practice. So if you guys have any questions, please ask. So I called it long with a stop loss right below this area. This was my stop loss area. And I said, take first target. We got first target. Right now we are about maybe 70, 80 ticks futures, and maybe over 100 pips or ticks on the spot Forex side. So we went long, we took first target. So first target was on 2 contracts because we do 3 contracts. T1 for 2 contracts we took maybe 20 ticks. 20 times 2, that is 40. So we already 40 ticks up or pips up, and now we move the stop loss to entry. And now we have a target. Gold, my gold target is all the way to 1700 for this trade in particular. 1700, folks, is right here. This is my 1700 target area. Why is that? Do you see something that is around 1735? Do you see something here? This is my sell indicator. This is the main target. This is where the market makers are showing me that they're interested to bring it here. Not something I can, I pull out of my pocket. This is sell indicator. So next indicator that I'm talking about today is going to be sell indicator. Okay, substantial attraction levels. And let me go to, where do I go for that? I go to the charts. Where are they? Right here. So what is substantial attraction levels? Let's look at, for example, crude. This is crude. Substantial attraction level is a study, or they call them with CRH studies. In other platforms they call them indicators. It's a study that you could choose to have up to 50. This has one only. In this case, it has one. I want to see the biggest. You choose 50 market makers or market movers entries, the biggest 50. Do you understand what I mean by 50? So 50 biggest entries in the market around the price or outside of the price, as long as they're the biggest 50. It is very important to understand, right? And let's go to the ES, E-mini S&P. If I'm looking at E-mini S&P, this one here, I go to studies, substantial attraction level. Just this is for training. I put 20. Instead of 50, I put 20 to make it easier for you to understand it. This shown me, ES has shown me that I have 20 levels of the heaviest entries in the market that are the market makers are interested to bring the S&P to it, E-mini S&P to it. Most of them are below. The thicker is heavier, and the darker is heavier. So I have 50. These are important for me because let's say if I want to take a short or grab a short on ES, this will be a target. Right here will be a target. This area will be, because I have a lot of entries, a lot of interest here. So this is crucial to trading. What else do I have? I have to show you this GC gold. Look at gold. Remember, gold we took it long from 76 on the future side, but look at the where the main attraction level is. You see how big it is. See, although I'm looking at 1700 for target for a reason, this is my target area right here, 1700. Why? Because there is resistance there, so I don't want to risk it. But that's how things works. Jesse, hey Simon, love your room and Telegram channel. I am in trial now, just love it. What else? The accuracy. Yes, thank you. The gold. Yes, I mean yesterday the Nasdaq 1,000 ticks move. Today the gold it's already going from the bottom area from 17. Let me give you also an example of the volume profile level and why I grabbed it from 1776 area. See this? Gold. Look at this. Best entries now. CFDs are this, but future 1776. So they were exactly at the bottom. 1776 from here. These are the best entries. Okay, right from the bottom. Thanks, Jesse. Appreciate it. You're asking the right questions during the trial. That's why, and you got everything installed and everything. So it will be hard to cover everything within the next. I think I have 25 more minutes left. But folks, we have Sal study. If you go to the website, okay, the homepage, we have our YouTube channel on top, right? It has a lot of information, but go to education, please. Education, it has two sections. I want you to pay attention to these. Whatever I'm telling you now, that will not even do justice to what we have. So within the education, I have two sections. Section 1 is about Sierra charts and how easy it is to use. That is not education for trading. That's education on using the software itself and what we can do to help you out with the software, including like how can I share my charts with you, my indicators and everything. The second section is important for your education, because if you know about Sierra charts, you skip to the second section. This is very important, folks. On the website, you have these videos. These are crucial for your knowledge, because even if you don't join us, you need to know about volume. I have a group of people that they are joining me now, testing us now. They trade indicators that are technical indicators. They trade ABC methodology for trending, and they trade Fibonacci. Once they start implementing volume profile to this, right? It's like a light bulb went off. Go, my God, this is unbelievable, because now they know exactly where the market is going and where the market is stopping, instead of guessing, right? For example, this continuation zone, unless we break lower on the gold, which will take our runner out, if we break below this area, we are going to come back down lower on gold. But meanwhile, we are holding along all the way to 1700 level, right? So it might give us like up and down, back and forth, but we know where the stop loss is. We cannot move the stop loss randomly unless we move above this area. You see this area? Move into this low zone, low volume area, which the market either going to cover it fast or reject it slightly. Until then, we cannot move the stop loss higher. We can move it to the middle of this area at that time. So there's a lot of details that trading requires, especially if you want to learn trading, not guessing. We don't guess. We anticipate markets move, but then when it comes to entries, it has to be scientific, right? We went over that. The next study is DRL, dynamic reversal level. That's also a very important study, DRL. DRL, dynamic reversal level. Let me give you an example. Do you see those on the right-hand side? 140 minutes, 1440 minutes, this is daily, 15 minute, 30 minutes, 45 minutes, 60 minutes. These are some kind of either attraction or support and resistance level. They work both. Very important. So for example, on the 1440 minute, you notice we have two. One is here and one is here down. So this is resistance. This is target or support. You see this? Okay, on the crude at this time. But every day they will change, because there's an embedded candle, a daily candle inside it. It will change when it closes. The new candle opens up. Same thing with 45 minutes, 60 minutes. Okay, and this is how it works. Inside this indicator, there are 1, 2, 3, 4, 5, 6 prominent reversal indicators and target indicators. When at least two or more line up at the same price, it will show. It will show in here. You don't have to do anything. It's already embedded in the price, right? It's already embedded in the chart or in the indicator itself. The next indicator that I'm talking about is going to be power line. This is also a very important indicator. Why? Imagine you have a very high-end trend line, but it's not a trend line, it's power lines. For example, here's a power line indicator. You see these ones. So these will create, look at this, it stopped it from moving. Look at how it nicely moved down from here, right? From here and then down from here. and then it blocked it. This is a very important indicator for support and resistance. Of course, when we trade, we don't use these indicators to anticipate the move. You have to understand, we anticipate the move first using volume profile. So volume profile, remember we talked about, what was it here? We talked about this. We anticipated the move long from here on the gold. So we anticipate the move. So we anticipate the move, A. Now, when do we use power lines? For example, this is 15 minutes power line indicator. For example, if I have a long from this area, for example, if I have a long from this area on NASDAQ, this power line will confirm that long. Meaning, after we look at the volume profile, we have a level to anticipate a long, for example, then we can use our power lines. If I have a power line sitting like this, that's a good confirmation. If I have a DRL, dynamic reversal level, that is also sitting here, okay, that's also a confirmation. So anticipate, confirm, and then execute. This is the style of trading. Now, regardless of what I tell you, folks, it will be hard to understand the whole methodology. I want you really to go to the website, which is Anna has a link to it. Also, I shared a video. I will give you the website as well here too. Okay. And then go to the education page, learn about this. And then once you learn about how easy it is to get Sierra chart, really it's easy. It's really easy. Then you would probably go to the education site and learn more. And then you go to 2-week trial. Once you get to that, he'll tell you exactly what to do. It's very easy. Another question, how long would it take to learn your method, and do you have? Yeah, I do. Well, payment is not a big deal. We can always negotiate that, talk about that, and we have also detailed information pricing here, Jesse. Detailed information about pricing. Everything is here. You know, it tells you how much it is. It tells you what we can give you back in terms of Sierra charts. You pay for Sierra charts separately, but we will pay you back. How to connect, everything is here. How long does it take? I think you already know a lot in the past few days you joined because you're asking the right questions. But really, it depends on what kind of trader you are. It depends on how focused you are. We have 3 days live training sessions and trading sessions. You can catch me and ask me questions from 9 to 11, Tuesday, Wednesday, Thursday. I am always available on Telegram as well. You see this? Telegram, you can basically see I have all these people private texting me for questions as well. We have a channel for indexes, metals, indexes meaning the NASDAQ or the NAS 100, the ES, whatever, all these indexes, metals, gold and silver, right? This is the elite members. I have 146 elite members that joining. This is open. It's not for trading signals, but sharing thoughts. Everybody can talk or chat here. I have one for oil and nat gas, and I have one for Forex pairs. Okay. And on top of that, folks, we have what do you call it? We have access. You can access this. We have a full members area. Where is it? Where is it? Full members area right here. It's part of, once you log in, you have all these sessions that you could basically access, full advanced, all these recorded videos, and you can just go in and watch videos and learn, okay? It's all here. Thank you for the questions. On the website also, go to YouTube channel, please. Okay, I have a playlist. If you go to the playlist, I have 3 categories. They're available on the website, but on the YouTube, you can have more, a lot more on YouTube. Fast track on learning how to use Sierra chart and what can we do to help you. Our advanced indicators, what do they do? You remember the indicators that we have, there are 6 indicators. The next indicator will be reversal signals. This is the simplest one we have, but it's, where is it? Where is the reversal? Reversal. This is an arrow signal that it's extremely technical. We don't use it for trading, we use it for confirmation, right? It's extremely technical. We don't use it as is. It has to be combined with other anticipate, confirm, execute system, volume profile, power lines, etc. Okay? And we have voice alert line. This is something very interesting. Why? How many of you trade multiple instruments or watch multiple instruments? Can you help me out, please? Like, for example, we do about 20. We do Euro yen, US yen, USD Swiss franc, pound yen, silver, gold, US oil, NASDAQ. I watch them all. Now, okay, 25, 32, 5, 4. Okay. Now, that being said, we have an indicator, okay? Once you put it on, for example, I put a line here. Let me remove these. Okay. Pay attention, please. I have a, let's say, I have a line, I would say here. Do you see this volume profile area? I have a line here, for example. And it bounced from it before, but let's say for the sake of this case, if I have a line here, it will print on all S&P charts that I have, 5 minutes, 10 minutes, 20, whatever you have, it will print on all of them. But it will also give you an audio. It will tell you ES. So now if you're watching gold and you hear in your ear, ES has hit the level, so pay attention, you might trade it. You go back to ES, okay? Sorry, you go back to your ES and take the trade, okay? Wherever that ES was. Here, take the trade. That is also part of what we do. Great value for the service. Why is that? This month so far, September, it's been very tough, but I only called so far 16 calls, trade calls. 16 for the month so far. Today is the 22nd of September. I call them for members. When I call a trade, folks, I call, and if you join us as a trial, you will see the history as well. I call entry, exit, stops. For example, just above the, okay, stops. See this? Yesterday's NASDAQ that fell for 1,000 ticks. Stops are just above the new small high for the short. So I give you the stop loss exactly where it should be. Now, why did I say just above the new small high for a short? Let me explain why did I say that. Let's say I'm looking for a short and my level is here for a short, right? And the market came down, and then up right to my level. Now I am trading NASDAQ, NAS 100. The price is a little bit different than somebody who's trading NDX USD, which is in the Forex market. And the price is a little bit different for somebody who's trading NQ. Do you understand what I'm saying, folks? So this is the same instrument, but 3 different prices, for example, or 2 different prices, right? But if I tell you above the high that just happened here, so you know exactly where to put your stop loss. The stop loss is right here, right? Whether you're trading NAS 100, NQ, or if you're trading NDX. I do NDX as well. I'm using MT4, MetaTrader 4 platform with my broker. Okay, I'm using Sierra charts for CFDs to watch them. But when I get in, I'm getting at NDX. Do you understand my point, folks? It's not complicated really, but it needs you to think outside of the box, and you need to look at the market's different. And there's no risk, by the way. Joining a trial is free. making an effort to downloading Sierra charts, we can help you on setting up, getting the data feed. They give you 2 weeks free trial, and I can give you my templates. I can give you all in one click. You can just download all the templates and everything, one click, and you can start seeing my charts that I have, so you can have the same and you can follow. And you'll have 2 weeks with us in the live room and on Telegram and following, okay? So once I tell you that's the short and this is the stop loss, and that's what I mean by I called 16 trades. So far, we had maybe 3 stops. All the rest were profitable. Now, by profitable, I mean either small profit because the market went against us after we took some profit, or continued. We are up 2242, 2,240 pips or ticks, okay? In terms of the trade calls that I made, whether members took them or didn't take them, or took some of them, missed some of them, that is not the idea. The idea is I made those calls, okay? And if I don't call, let's say if I say the Nasdaq is going to go down today, but if I don't tell you the entry and the exit and the stops, I'm not going to count it as a trade. It's just an idea. It's just anticipated trade. Maybe you can benefit from it from your own way. Every morning we do top-down analysis. I give levels, and some of them are tradable, some of them are not tradable, right? So the cost of the membership alone, if you follow the trades after you learn, it's really, within a couple of months or maybe less, sometimes couple of trades, you can recover. For example, this gold that I called this morning and we are in it, that will be sufficient enough to cover most of the cost or the investment, as my previous indicator or previous presenter said. Investment, right? How do I trade? How many contracts? All included in the trial. You will learn all about us. We do 3 contracts trading, but you can change it according to what you like. That is optional, but after you learn the methodology, my idea is for you to learn. Anna has a couple of handouts. She will give them to you, and hopefully I will follow up with you with emails later on. I will give you maybe an invitation to the room. You can join us one day. You can ask questions. But if you are trading Forex, if you are trading futures or CFDs, you need to learn about volume profile. Volume profile is key to your success. Without volume profile, you really don't know exactly the continuation areas, the rejection areas, what happened in the past. It's very hard. Just watch the videos on the website, right? Anticipate, confirm, execute. And let's go back to the website again. See you here. So to contact us, just click there and just send us an email. It's very straightforward. Okay, put your name, address, pricing and services. We offer access to members area. I showed you. Live room, we have 3 days a week from 9 to 11, right? 2 hours. I'll give you all the information you need. I'll answer all your questions live. And if you don't catch me, or if you're not available, you can always get me on Telegram. You can ask me. You can ask other members. Complete set of indicators that are available to you. Complete set of templates that I have, that I created, that you can have them easily. You don't have to create any templates. I just give them to you. And 24 hours Telegram, as I mentioned. The pricing is $2,500 for the first year. Don't panic. It's not every year $2,500. But that will give you also Sierra charts for free. So we will give you Sierra charts money back for the first year. After the first year, you are only paying $250 annually. That's it. If you want to cancel, you don't want to renew annually, I think you keep, yeah, you keeping everything except for the live trading room. You're keeping everything else. Very straightforward membership, folks. Annually, 1 year is 2,500. Actually, no, 23, 20, no, what is it? 2150, right? 2150, basically, because we're giving you 350 back for Sierra chart. 2150. After that, you're only paying 250. And if you decide to cancel, you don't want to join maybe you travel, maybe you're busy, maybe you got, right? I'm not going to charge you 250. You cancel that, you keep everything else other than the live sessions, which is by now you should be, you should be okay with that. You wouldn't need me by then. Hopefully you wouldn't need, but if you need me, it's $250 annually, folks, not monthly, annually for renewal. Okay? Any questions? I have 4 minutes. I think I did well in terms of time. I didn't do well in terms of covering the whole thing because it takes a lot of time. But hopefully I will see you in the live trade rooms. Gold today so far is going for about, it traced a little bit down, but 97 ticks. Where is gold? Sorry, there's the gold. I called it, as I said, I called it this late morning. See, the entry was here. You see it right here at the bottom. A look, gone, 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 gone. I told everybody gold is going great. Take first target and just move the stop loss to entry. That's it. And then that was it. And we are still holding. Okay. Email me. Sam is asking specials. Email me, Sam, because everybody has a different idea about membership. As long as it's fair, I don't mind. I feel like I'm offering the best because the price is very reasonable and technically it's for life. 2,500, actually 2,150 is basically you do this for life. It's like if you stay with me for a year, that covers it, covers the education, the indicator, and renewal is 250 only if you decide to renew. If you don't renew, you're not losing anything. Specials, I have a special here. Ask us for special. So email me, and I'll let you know. We can maybe have a meeting together, you and I. We'll maybe put a plan together just for you. I don't mind, right? As long as you benefit from it. My idea is for you to benefit from this. Good question. Thank you. Yeah. Payment plan, yes. I mentioned that. Yes, we do. If you want, we can focus on that too. But for now, I think the membership is really affordable for the what we offer is super affordable and super valuable. The indicators themselves could cost a lot more, right? Couple of trade calls will cost a lot more. So thanks everybody.
Hi, everybody. Thank you all for being here. I'm super excited to be here right now. So let's see, there are a lot of people in the room. I'd love to know, where are you guys all coming from? Just throw it into the question box right here. Where are you guys all from? Or doesn't have to be from, where are you at the moment as you are sitting here and watching the presentation? Where are you guys? And don't be shy. You guys are taking your time out to be here. So I always teach my kids, if you're going to do it, we only have this moment. So be in it 100% or not at all, because otherwise it's just, kind of half-assed and we never get anything accomplished that way. So let's be in it full on. And that's the best way that you will actually learn something and get something out of your time being here, right? Because time is our only only real commodity left. Like there's no other commodity. We'll always make more money. Something will always be like that. But with time, you don't get it back. So you guys are taking your time out here to be here. Where are you from? Write it in the group right now. Let's interact, because day trading, I'll tell you something right now, is not a spectator sport, right? So it's all about the habits that you have, right? If you guys are going to be in it, you got to be in it, right? You can't become a basketball player by sitting in the bleachers. So are you guys in it? Are you all into it? Because if not, you know, it's better to just go and actually do something you're really going to enjoy. I see one person from Denmark. Thank you for responding. Is that the only person here? Because I'm looking and it says over 100 people. Wow. So Anna has a thumbs up. What does that mean? Are you from a thumbs up area, or are you guys there? I would love to talk to an audience that is there and excited to learn. Are you guys there right now? Hello, hello, hello. Or are you not hearing me? Oh, there you go. Ken is from Texas. Awesome. It's either delayed or people are sleeping. Where are you guys? I don't want to just be another monotone in your background. That's kind of boring for all of us, right? I want to be part of what you're needing. The whole point of this presentation is for you guys to get something out of it, right? So being in the background, not so much. So where are you guys? Hello? I'm going to yell and scream until somebody else responds. Are you guys there? It's much more fun if you're actually participating. So thank you for the ones that are actually participating and responding. Wow. Okay, well, I'll begin because the 3 people that are responding are definitely interested in learning something. So I will begin. This is me. This is Marina, the trader chick. One thing I'll tell you guys about trading, being in front of your computer and just staring at it is never going to get you into becoming a real good trader, simply because we are humans. We are here to have fun and learn, right? Like that's the whole point, is every day we want to do something new. So I actually have a question for you guys, whoever is there. Who here actually enjoys Cirque du Soleil? Right before COVID, this was I was an absolute fan. Like whenever I possibly could go to Cirque du Soleil, I used to go. And then during COVID, I was told that it actually became bankrupt, which totally broke my heart. But now it's back up and running. And we actually just had a show here, like 2 weeks ago, which was kind of cool. That means they are back. So one of the coolest things about Cirque du Soleil is these people that we watch, right? Like when we watch these people, it's absolutely incredible to look at them and be like, wow, that they are incredible, they're extraordinary, they're, you know, unbelievable. But the reality is they are literally just ordinary humans that are doing extraordinary things. And what does that actually mean? It means that they started off just like me and you, and they just had this idea that this is what they wanted to do. So whoever is here right now on this presentation, you guys are pulled to trading and the financial markets, correct? Like literally, that's what we want to do. And then we always look up to those super successful day traders, but we forget that they started just where we are. But the difference is with those professional traders who are actually living and making money off of it, and it's actually very similar to the Cirque du Soleil people, is what they put into it, right? Like I said, it's going to be all about what we do to get to that success zone, right? People who are sitting on this summit right now and just having this as a monologue in the background, I can guarantee you will not be successful. Why? Because it's not a spectator sport, right? It's not something that you just throw on in the background and think that that's how you're going to do it. You have to commit to it. What does that mean? You commit to it. You put in that time and you say, I am here. I am 100% here. I am active. I am going to do this. You have intense focus on being here, right? Like they always say, what you do is one thing, you do in everything, right? So again, whoever's sitting right here and has all these other things going on and trying to listen to the summit in the background, there's no focus, right? It's too scattered. So everything they're doing, none of it is actually going to be masterful because nothing is being actually done. It's just kind of up there, right? And then I get emails, oh my God, I lost $100,000. What do I do? Only to find out that it's, you know, the habits weren't in place. It's all about those habits. So being in the moment completely and actually doing what's in front of you right this minute, that's what makes you different. Discipline. Discipline isn't something we're born with. Discipline is when you show up every day, regardless of how you're feeling, what you're doing, you show up, you do the work. I don't know if any of you guys have ever heard of Woody Allen. He's older now, he's in his late 80s, but he was one of my parents' most favorite directors, film directors ever. And he always said, he's like 80% of success is showing up. Showing up, but showing up does not mean putting something on in the background and pretending that you're doing what's in the background. Showing up means being here in the moment. That's what discipline is. It's showing up, trusting. This is such a huge, huge thing. When you are day trading, you have to use a platform, right? You cannot not trust your platform. And a lot of times, a lot of people are practicing with their platforms in the live market when you can learn your entire platform and how it works being in simulation with paper money, because a lot of times it's a learning process, right? You're not going to be able to get it 100%. These performers, they don't get up on that high wire on a bicycle with both of their partners without ever trying it on the ground, right? You cannot build trust by throwing yourself into the fire. It's not possible, right? It's actually really stupid. But a lot of people are doing that. And in our case, it's with platforms and not understanding the different instruments, not understanding how they're moving. So there's zero trust. And people believe that if they're going to put their real money into it, that's how you gain trust. That's actually the opposite of how you gain trust, right? Because if you don't know how you're going to use the equipment, the more you lose with that equipment, the less you're going to trust it. You're never going to grow that trust. You have to do everything by practicing in a safe space. And confidence. These performers are completely and totally confident, 100%, right? Why? Because they've done the work. They've committed themselves. They've gotten that discipline. They trust. They understand. They are there in the moment. That's what this is. This woman did not hop up on this bar just because the night before she decided to be a high wire balancer or whatever they are called, acrobat, right? No, there was years put into this. There is trust, confidence, discipline, commitment, intense focus, all right here. And that's what makes a real good trader. Okay, that's what we have in common. So it's a lot more than a lot of people think, right? People are like, oh, what does Cirque du Soleil have anything to do with this? It has everything to do with it, because in Cirque du Soleil, when we look at those performers, we know, wait, they have committed, they have done the work. We look at it and we understand, because otherwise they die. Traders or people that want to go into trading, there's zero barrier to entry. So they just get in and try to hop on that high wire, and they fall, right? And it's more than 95% who will probably be either paralyzed or dead because that's what they're doing. But people don't realize it like that because it's their money. But money is everything, right? I mean, we can't breathe today without money. It's literally as important as oxygen, right? People don't realize that. They put all this negative stuff to money and stuff like that, but there's no negativity when it comes to money, right? Because money, we can't survive without it. So if we're gonna, but we can certainly covet it. We can take care of our money, right, by not being stupid and just give and literally donating it to the market because we don't put in the work, right? So when you do start to get into the work, what's really important is everything starts from the bottom, from the basics, right? Everything begins from the basics. And today I actually want to talk about those basics. What are the basics in the markets? And that's trends. If you don't understand what a trend is, what a trend looks like, when there's no trend, when there's a breakout of the trend, you will not be able to do a single successful setup, right? You'll never be able to make any money. And this is a reality. I know that a lot of people will, fluff it up and give you all this nonsense. But the reality is, if you don't understand what's going on in front of you, you could sit in hundreds of chat rooms. You could sign up for hundreds of memberships. You could get alerts all you want, but you'll never get it because you won't understand what's in front of you. And that's the most important thing. You cannot be a Formula One driver. You don't even know how to start the car, right? And that's just the basics. So before I continue, I actually have this entire presentation completely done for you for free. So you could use it when you have time and when you feel like being in the moment, because I know Anna is going to be sending all the replays. So go here right now, makingofadaytrader.com, making ofadaytrader.com. You could go and get the entire free worksheet right here, makingofadaytrader.com. So who am I? I am Marina. I'm the Trader Chick. I'm actually coming to you guys from Antigua, Guatemala. And this is me with my 2 sons. And before I was a trader, I want to break this misconception that you need to come from a software background, financial background, math background. I was a fitness instructor. That's what I was, and a travel writer. I'm still a travel writer. And now I hire a trainer to be my fitness instructor. I'm done with actual teaching it. Now I get to hire them. And that's the fun part. I'm trilingual. I was actually a refugee from the Soviet Union, where I originally was born with the language of Russian. And we moved to the United States, where I learned English. And now I've been an expat in Central America for over 20 years. So Spanish is my 3rd language. And the main reason I bring this up really is because when I learned Spanish in my later years, it's the same thing as learning how to trade. It's the same thing as learning anything. You need to start with the basics. I wouldn't have been able to enter a full-on conversation with all native speaking Spanish speakers, you know, sitting around talking about, I don't know, let's pretend nuclear engineering, and trying to pretend that I'm going to get in and be able to, you know, keep up with them. That's crazy, right? I had to first start, hola, mi nombre es Marina, like with the super basics. But 95% of people, they hear that you can make money in the markets, hop in, not even understanding how to say hello, and trying to make money, and then wondering why they lost money, and then saying, oh, day trading is risky, it's a gamble, it's for losers, blah, blah, blah. Because they forget that you have to learn it, right? And the coolest thing about day trading is you could do this anywhere, right? And I used to do a lot of live shows. I'm actually going to be on the Money Show next week. Okay, so again, you'll get everything in my presentation, makingofadaytrader.com. Now, back to the performers, because this is something you can visually grasp. They did not begin just hopping out of bed and saying, I'm going to be a high wire performer and just jumping on it, right? They began with the basics, right? This guy did not do aerial tricks 60 feet up in the air until he first learned how to do it maybe 1 foot off of the floor, right? Because it takes that kind of time to build up that kind of confidence. So what are the actual basics of trading? And today I want to talk about the 4 basic strategies, but they all work around understanding the most basic thing, and that's trends, right? And once you understand the trends, everything else will make sense. It's like the tightrope walker, right? They begin on the ground on the rope, and then they slowly lift it up, maybe 1 foot off the ground, maybe 2 feet off the ground, and so on and so forth, okay? They don't get there by saying, I'm going to be a biker on a high wire. It takes time. So let's begin. What are the different trends? We understand that there are 3 trends logistically, right? There's the upward trend, downward trend, and the sideways trend. The sideways trend is literally where we will lose all of our money and even more if we don't understand how to avoid it and how to respect it. And that's what I really want to focus on. So what is an upward trend? It's pretty simple, right? It's when each pivot is higher than the next pivot. This is where you would look to enter a buy. This is when you're going long, when you're going in at a lower price point, exiting at a higher price point, and taking the profit in between. What is a downward trend? It's literally when each pivot is lower than the other pivot, okay? And what you're looking for is for a short, you are selling. What does that mean? You are entering the market at a higher price point, exiting at a lower price point, and you're taking the profit in between. Right now, with what's going on in the market and in the world, this is when shorting is really going to be profitable for a lot of people. Okay, like the market has just been tanking. I don't even want to look at my portfolio for as far as day trading. It's great. You just go along with the technical analysis, and in this case, the downward trends. Now, let's talk about those sideways trends, because these sideways trends, these are the most important trends that you need to understand and to stay away from, okay? Downward trend. So what is a sideways trend? It's the consolidating market. It's a transitional area. It's the chop, the exhaustion pattern, the indecision area. I don't care what you call it. This is a flat zone. It is an area where you don't want to be anywhere near. Why? Because look at it. Look at it. It's going back and forth. It is so ugly. Why would I ever put my money into complete indecision? There's such uncertainty in this. Okay, so why do the majority of traders end up losing their money in this type of a market? It's because they think they can outsmart the market, or beat the market, or predict the market, right? None of those three will ever work, because the market is going to do what the market is going to do, right? So instead of trying to say, well, the market's been going up all day, I'm going to go long, or, well, the market's been going up all day, it's got to correct, I'm going to short it. What you do need to say to yourself is, you know what? The market right now is in a decision. I'm not going to touch it. Why? Because we day traders are not here to go in and out of the market every 5 seconds. We are here to listen to the market, to watch the market, to understand what the market is telling you, right? And what is it telling you? It is screaming at you. Don't come near me right now. I don't know what I'm doing. And when you understand that the market actually has its own language and speaks to you, that's when you will be able to make real, valid decisions. And at the end of the day, I don't care what you think trading is, it's never about the money. And if you guys are completely enraged by that, stop right now, because it's never about the money. It's like saying a doctor is in it for the money and does not care if they're going to save people's lives or not. It's not like that. It's about the decisions that you make. When you start to make the good decisions, the money will come. A good doctor has been making good decisions, saving patients' lives, and then the money comes. If they're constantly making bad decisions because they're only in it for the money, guess what? Their career is going to be over before it began. The same for traders. It is not about the money. It's about the decisions you make. And when you understand what the market is telling you, you're making the right decisions. Okay, so understanding what is happening in front of you is the only way you're going to be able to actually start making those good decisions that will give you the profitability consistently and allow you to make this as a real career. All right, how do we spot these areas and understand what they are and stay away from them entirely? That is done with areas, okay? Support and resistance areas. Look, the market respects certain areas, and we as the day trader, retail individual trader, we need to respect those areas as well. Why? Because the market does. We do what the market is telling us. We never want to tell the market what we think it should do, because it's going to ignore you anyway. So to me, support and resistance areas are literally the safety gears of our trading, right? Just like Formula One drivers, it is a known fact that during Formula One racing season, 25% of Formula One drivers will either have an accident or a fatality. So when they get into their car that goes 200 miles per hour, by the way, you'll get the same adrenaline rush driving a Formula One car as you are in the live market. Don't forget that analogy, because that will save your life. Remember that. When they hop into their car, they have their helmet on, they have their fireproof uniform on, and they always put on the seatbelts, because they know that 25% of the chance of something really serious happening, and they protect themselves. People who want to day trade, who are not professionals, the 95% that fail, don't believe that that rule applies to them, that they will not need to have any safety belts on. Guess what? You do. And you start with support and resistance areas. So what is a support area? Support area is literally when the market is going down and boom, it hits an area, it hits a floor, and it hits it over and over and over again. You need to draw this in. Do not have a mental seatbelt. Do not have a mental support area on. Okay, it is telling us that the market is now coming to this area. It's respecting it. It's not sure if it's going to continue going down or if it's going to transition. So we need to sit it out, because we've drawn it in, we've respected it, we're understanding it, and now we're waiting to see what the market is going to tell us. Okay, what is a resistance area? It's literally the opposite. It's when the market is going up and it's hitting an area over and over again. It's the ceiling of the market. Over and over and over again. It's hitting that area over and over again. Okay, I'm going to repeat this again. You need to draw this in. You cannot have a mental resistance area, because when you're in that live market going 200 miles an hour, adrenaline pumping, you're going to look to the left to see if you made the right decision, and nothing's drawn there. You're not going to know what's going on. You're going to be blind and sweating and completely convulsing. But when you have everything drawn in, you'll be like, you know what? This makes sense. This was here before. I understand why I just did what I did. It all comes down to those decisions. All right, so how do you spot these areas before they begin? Because by the time you're already in the third or fourth hit, you already have a full-on area going on, but you could avoid being in that area beforehand. And how do you spot that? That is through reversal patterns and divergences. This is, to me, the most important thing you could possibly understand as far as trading. What is traders' map to shift in direction and trend? Double tops, triple tops, double bottoms, triple bottoms, head and shoulders. This shows us what's going on. So what is a double bottom? Here is a perfect example of a double bottom, right? As you can see, there's this line that I have drawn right here. What is a divergence? I personally only use two indicators, the EMA lines and the MACDs. Right here, this is the most important, this is like my holy grail indicator of all, is the MACDs. 1 second. So when my chart is telling me that it's flat here, and my MACDs are telling me that it's already inclining, what does that tell me? It's not telling me that it's gonna switch direction. It is telling me that the market is losing complete strength. And the last thing I ever want to do is put my money in where the market is losing strength. I want to be in a market that is full of strength. Here's another example. But if you look here at these pivots, this is going down, yet this is totally flat. That's already telling me that the market is losing its steam. That's divergence. So with divergence, I'm already preparing myself for this might not continue until I get that extra definition, and boom, then I expect to see what's the next move. And it does not mean it's going to 100% be a reversal pattern, reversal of the market. What it does tell me is that the market is slowing down. I have to wait until it confirms the actual move going down. Okay, now, if you don't have all these areas drawn in, if you don't understand how all of this works because you've been putting in your mental supports and mental resistance, or even worse, you don't even know what a support and resistance area is. It's literally like getting into a car and not understanding where your brake or accelerator is, right? It's that basic, and a lot of people don't even understand what that is and then wonder why they're constantly losing money. Right? Because they don't even know where the brake is. So if they're in the highway on the Autobahn going 90 miles an hour by miraculously getting there, and there's a car that cuts them off and they don't even know how to pause because they don't know how to press on the brake, right? You need to have your areas drawn in, because if you don't have your areas drawn in, you're going to miss out on some of the most, hang on a second, on some of the most spectacular trades out there. And what is this? The breakout trade. What is the breakout trade? It is when you are heading in one direction, and all of a sudden there's this massive uncertainty area. So here's a good example of what I'm talking about. You live all the way south over here, and your friend or your sister, brother, whatever, who live north of you, you've been to their house a million times, invites you to their barbecue. And you're like, all right, yes, for sure, I'm coming. You hop into your car, you get on the highway that you've taken 1,000 times, you're totally confident of the road, but all of a sudden, there's this massive construction area, okay? And on that construction area, they're telling you, you gotta get off the road. It's a total detour. And now you are driving in an area that you've never been to before. You don't have any idea where you are. This is what happens to me. I don't know if there's going to be construction site signs. I don't know if there's going to be, if I'm going to end up getting lost, because a lot of times they forget to continue with the detour signs. Google and Waze has not caught up with the detour yet. So even if they stop, I might not have any idea where I'm going. So basically what's going on in my head is total uncertainty. I have absolutely no idea what I'm doing, where I'm going. I'm freaking out. Would I be putting money on that particular moment in the car that I'm going to continue to my friend's house? No. This is that area right here. It's that channeling market with the resistance and support area. This is that area that is telling me don't do anything until you are given the confirmation. And all of a sudden, finally, after following the detour signs, there's this huge big sign saying, all right, construction is over, get back on the highway. And guess what? Boom, I am back on the highway with all my confidence. That is the breakout trade. This is where you can go in. This is where you can put your money in on the breakout trade. All right. So if you don't know how to design, you know, the resistance areas, support areas, you're going to be missing out on all of that and end up losing probably a majority of your money in the channel in the first place. Okay, so let's put all this together. Again, everything that I have done in this presentation and a lot more is in a free cheat sheet for you right here, makingofadaytrader.com. Go there and you'll be able to get it. So as I was saying about the breakout trade, which is literally one of the most powerful trades out there today, right? So if you're not understanding what is going on in the market, you're heading up here. This is that consolidation area. This is that detour. This is that construction area. And then when it finally breaks out, you're going to be missing out because you're going to be too busy trying to make money here and then end up losing money here, going into revenge trading. And by the time there is a valid trade happening, you're not going to be around to see it, right? And that's really the most important thing of all. Hang on just a second here. Okay. So understanding this will make all of the difference, okay? Understanding where that breakout happens, that's when you get into these types of trades. So I use my MACDs for the entry of the trades. As you can see here, it's totally flat. It's ugly as could be. So the MACDs, this dotted line right here, this is showing me 0. This is where there's absolutely no movement, right? And it's just kind of back and forth. And all of a sudden, boom, breaks out. Look at all this movement on the MACDs. It breaks through. I have all this movement. Boom. That's where I enter the trade. Okay, I want to, before I go into the live market and do some live showing for you guys, one really, really important thing about trading, a lot of people think that the more different instruments that they are trading, the more money they're going to make. And I can guarantee you right here that 100% of people who are doing that are actually losing more money. Why? Because you can't master it all. Investing and trading are different like that. With investments, you want to diversify your portfolio. With trading, you want to stick to the one instrument. And that is exactly what the Cirque du Soleil performers do. They dominate the one area. All right, this woman here, I can guarantee you she is not getting on a motorcycle and doing wheelies. She's going to stick to this and master it. It's the same thing for day traders. Find your one thing. It could be crypto, it could be Forex, it could be a sector in equities, it could be just one, it could be Amazon, Tesla, Apple, it could be futures, but you got to pick it because you cannot be in 5 different trucks driving in 5 different locations at the same time. You cannot be trading Forex, crypto, all that all at the same time, as well as you cannot be doing many different equities at the same time or many different futures at the same time. It doesn't work, okay? And I can guarantee you it will never work. So whoever is selling you that, good for them. It doesn't work because they're not really doing it properly. All right, so remember, one thing. Find your one thing, and I can guarantee your trading will go to that next level within a couple of weeks. All right, everything that I went over here, go to makingofadaytrader.com. So I just want to do a really quick live market analysis because today it's literally a day of channeling market. Right before, first it flew down even more with yesterday's FOMC reports, which was just horrible, right? What is this? It's a channeling market. I have a really strong resistance area. And first I had this channel here. Then it went on to here. And we are pretty much in a channeling market. So this market here has been pretty ugly back and forth. And then finally, we are getting to a little bit more of a trending channel, right? Because we do have a thick enough, wide enough channel, with about 20 points in between here. But you also have to understand what is actually happening in the market, right? Just because it's a wide channel does not make it a good channel, right? It needs to give you that movement. When it's just back and forth like here, totally grindy, zero direction, that's not a good market. No matter whatever, whatever the size of the channel is, you have to understand the pattern, right? And that's the technical analysis of it. You have to see the trend going up. That's why trends are so important to understand, right? We have this upward trend right here, right? We have this upward trend right here, and then it becomes a wedge, right? And then we have this downward trend, which is actually quite beautiful, but it hits that support area, and that's okay, because it gave me a beautiful trend in time for it to hit this area, which I've already been prepared for and have my seatbelt already put in here in the first place. So now it's starting to head back. And once it gives me all my confirmations, I like to see my EMAs crossing down. I would be definitely interested in getting back in to go down for shorting the market here. But I first need to see the confirmations on the side of the market, okay? Because without those confirmations, you're just guessing and you're just doing a coin toss. And you don't ever want to be doing coin tosses when you're trading, right? Because that's literally just gambling, and we don't gamble, right? We have to have very strong, solid strategies that we can trust. And that's really the most important thing of all. And that's how you read the market, right? Even in a channeling ugly market like today, and with a lot of fear base, which is a lot of fear base going on today, this is something that we can avoid. All right, guys. So let's continue here. So the thing is here, we have absolutely everything we need to become successful, right? We have these summits, we have YouTubers, we have books, we have podcasts. But at the end of the day, how do you know that you're actually doing it right? How do you know that you're doing it right? Who is there to help you understand that? Because all of this is great, but the real question is, how do I really get started? And this isn't from beginners only. This is from seasoned traders, right? And I have seasoned traders come to me all the time, ask, how can I turn this around to be profitable consistently? Because that's really the bottom line. It's about that consistency. It's about making those right decisions. And 90% of the time, if not even 99%, it's simply lacking those basics, right? Because like I was saying before, we get thrown into the fire without learning the beginning, right? We're thrown into that high wire 60 feet off the ground without trying it first on the ground itself. And that starts with just the basics, right? It's understanding the basics. You cannot get into a car and just go, right? You need to understand the basics. Where is the clutch? Where is the brake? Where is the accelerator? Where is the horn? Where is the steering wheel? Where is the gear shift? If you don't understand those, how are you going to be able to drive this car? And even worse, imagine the first time ever getting into a car and the driver is telling you, all right, put on your seatbelt, it's going to save your life. But you've never heard of a seatbelt. You have no idea what it is. I know that right now you're like, everybody knows that. They don't. Every one of us is born without the knowledge of what a seatbelt is. We are all taught that. Okay? Now imagine getting in and not having any clue about that and freaking out. Oh my God, where's my seatbelt? I don't even know what that is. That is what's happening in the market all the time. The absolute basics of understanding how to even protect yourself. Okay, and that's the reality. And this was my own sad truth, because that happened to me, and I spent over $20,000 on my education and struggled for years because I was in all these alert in chat rooms when people were screaming, oh, this trade is great, this trade. I was chasing trades, not understanding why, removing my stops, having all these mental stops. I mean, it was a horrible thing because I was never taught why that trade is good in the first place. And me, on top of being taught, from then me understanding why it was like that. And it led me to losing almost $4,000 in 5 minutes. And I finally quit. After 2 years of struggling, never learning all that, I ended up quitting. But the thing is, it never that. The thing is, we all get bit by the trading bug, right? So that's why we're still here. And the thing is that it never stops itching. And the main reason why that is because we all know deep down inside that we can do this. We can do this. And that's when I decided to come back to the basics. I literally had 3 charts. I removed those. I had 10 indicators. I removed them and went back to the bare naked charts and eventually brought in the 2 indicators that really made sense to me. And today, one of my students came to me a little while back and he was like, you know, Marina, your teaching style is very similar to Coach John Wooden. It's like, who's Coach John Wooden? I've never heard of Coach John Wooden before. And then I looked him up, and this guy is a legendary basketball. He was a legendary basketball coach. I mean, this guy was incredible. And his entire teaching philosophy was, when in doubt, get back to the basics. I mean, this guy was, I don't think anybody to this day has outmatched him. He won 10 NCAA championships, 88 championships in a row. I mean, he was Los Angeles dynasty for basketball, and he trained the superstars of basketball. Yet every season, he would start them with the basics: how to tie your shoe, how to roll up your sock, how to dribble the ball, because it doesn't matter what you think you know, because your ego is always going to be telling you that you think you know more than you do. Because if you're on that field and you haven't tied your shoe properly and it falls off, you twist your ankle, it doesn't matter what you know anymore. You're sitting out the whole time because you couldn't get back to the basics to give you that foundation. So today, that's exactly what I'm doing. Special offer for only the participants that are here live right now. Only for you guys that are here right now live. It is my introductory course, Bootcamp for Day Trading. Bootcamp for Day Trading. This is my absolute introductory course, and it's good for beginners and seasoned traders. You can do it on any apparatus, desktop, laptop, tablets, phones, you name it. All of this is for $97. Bootcampfordaytrading.com. Bootcampfordaytrading.com. Go here right now. Now, what can you get for $97 today that is going to even come close to bringing you the same money on return on investment? You guys want to go golfing? Great. I don't even think one person is able to get in on $97 anymore. I'm pretty sure. I live in Guatemala, and I know that 97 bucks is not even what one person is charged anymore. It's usually like around $200, $300 per day, per person. How about you want to take out your family to lunch or your friends? We used to be able to do about $97 for my whole family for dinner in Guatemala. Today, for lunch, it's not even covering 2 people with wine. So you can't even do that anymore today. So let me break this down for you guys. What you guys are going to get in this course. First of all, simplifying your whole day trading package, right? And the platform, like I was saying, that confidence, that trust in your platform. A lot of times it could be really overwhelming. I give you a 30-minute platform tutorial at any platform, so that you don't have to worry about this and you could jump into the good stuff, the actual trading. Then we really get into the market anatomy, dissecting those trends, understanding all those trends, understanding reversals and divergences. This is crucial. This is your foundation, those bricks. Okay, then we get into that defensive zone strategies, the understanding of those telltale signs, spotting the support and resistance areas, understanding divergences, because this is everything. And you do not need any fancy softwares or indicators and algorithms. This comes with your platform, and that's the beauty of it. And then mastering the breakout trade, because the breakout trade is literally the most powerful trade out there. How can you master it if you don't have the other bricks in the foundation laid out for you? And how to avoid the fake out breakouts, because fake out breakouts happen and you can totally avoid them, so that you understand where those breakouts happen. And you will get unlimited access to this curriculum. All of this is worth $1,600. Okay, this is everything that you guys are going to get. And here are some of my students, and I have students from all over the world, because that's the beauty of trading. So here's Michelle, what she had to say. Finishing the boot camp, the feedback is invaluable. Best money I ever spent. Derek, you are the only mentor that checks the work. That is so amazing. I cannot wait to continue. I am enjoying your boot camp so much. I'm learning every day. So let me share something really important with you. Remember what I asked you in the beginning? How do you know that you're doing it right? How do you know you're doing it right? So why is it that CEOs, athletes can all have coaches? And we all know that that's what really makes the difference. I am offering in the that one-time $97 fee, 1 month of one-on-one mentorship, coaching with me, one-on-one, unlimited. So there is no how do I know I'm doing it right? Because I will be there for your accountability, for really helping you and coaching you, because that mentorship is what's going to take you to the top. Just that, those little questions, all that right there. And that is included one entire month. Plus, I run a live trade chat room, and it's me. No moderator, no administrators. It's me. Everything that we are learning in the course and the one-on-one that we're going through. I also have a live trade chat room where we sit together, implement everything in the live market, taking trades, and I am including that 30 days free membership for you when you get this. And all of this is valued at $2,600, but for you guys, $97. Honestly, it's a no-brainer. Go right here, bootcampfordaytrading.com. One time, $97. So what do you guys get in that $97? And you could go right now, put in bootcampfordaytrading.com so you can follow along right there on the order sheet. You'll get everything in the course. 30 days one-on-one mentorship with me. 30 days live in my live chat room with me, implementing and taking live trades together. Okay, and let's get real. I know for a fact every one of you here who has put money in the market, this is less than the one trade that you would normally take and most likely end up losing. $97, okay? The cost of this course alone will 10 times your return on investment from everything that you will learn. I can guarantee that. And then you could take out your family and friends to 100 of these types of dinners. So here's the thing though, because of my low price and because of my mentorship, I can only take on 25 students. I cannot do any more than that, okay? So go here, guys, right now, bootcampfordaytrading.com, and this is where you'll come to this order form, bootcampfordaytrading.com, one-time payment, $97, and you will get the one-on-one mentorship with me, you'll get a live trade chat room with me, and you'll get unlimited access to the curriculum for life. $97, you cannot go wrong. So go here right now, guys, and I am happy to answer any of your questions. So please let me know. And again, go here right now, bootcampfordaytrading.com. And thanks so much, Anna, for having me. I really, really appreciate being on the show again, and hope you guys all really got something out of being here as well. Remember, it's all about the participation you put in to everything, right? That's what life is. So hopefully you enjoyed it and have a great rest of your day.